Good morning, trading world. It is February 18th, 2022, 8:14 a.m., and this is my pre-market outlook and technical analysis for day trading the SPY. We are here on another expiration Friday. There's not much I want to say about fundamentals behind the market because I'm pretty much tired of talking about the Fed and rates. So let's look forward and look at the setup that we're in right now. And I'm going to discuss some things that I am looking to do today and over the next couple of weeks. Looking at the market right now, we have run kind of far by most RSI measures. So you can kind of see that today it was time for a break or consolidation. Don't be surprised to see a nice bounce today. This could possibly set up nice shorts for next week or over the next couple of weeks. And because of all the geopolitical headlines, I don't think many will want to go through the weekend long. Knowing this, it may create an opportunity to soften risk for a short going into next week. What I mean by soften risk is a well-timed short today could have you ahead in P&L going into the close today, giving you a cushion for possible outcomes that may happen next week. So let's say we're able to catch, if it's like a rounded reversal day, and we're able to catch the top or the middle of the day, which should be the top around here. And if we're able to short there and we come back down here at the close, we could go in ahead. I usually trade in multiples. I don't trade single puts. It's usually in triples. So I'm usually trading 3 at a time of whatever it is, whatever the particular issue is. So if I'm buying puts on the SPY, I'm usually doing it in multiples of 3. And the reason I do that is for days like this. If we can get that advantage and we get down to the area that I'm looking for, one will definitely either be rolled as a credit so that I can take profits for today, or just closed out in general so that I can take profits today. Another one may be rolled to a low so I can cash in some of the gains as a credit and still have a position on for next week. And then the other may be left alone to wait to see what happens next week. But by doing that, let's say we come down and the option increases in value by $100. That means we're $100 in ahead going into next week. So if we have a bounce back, it gives us that $100 cushion so that if it does come back against us, hopefully it doesn't eat up the entire $100, but it gives us a little cushion to kind of make a decision whether to close it out and wait again to see what happens, or we're in a great position where the chop that may happen doesn't reach our entry and we're still in a good place next week. So that's what I'm looking at doing. Another thing I will do today is look at stocks in the S&P 100 on a year-to-date percentage basis, and those that are above what the SPY is on a percentage basis, those I will look at as potential short candidates for next week, or we'll say over the next 2 weeks. So those are some ideals and things that I am actively doing or will actively be doing today. Let me get out of the drawings here. One of the things that you can do, like I said, I'll be looking at things in the S&P 100. I'll pull up a scan, and all you have to do is just basically put in the S&P 100 in the scan tab and bring up all of those, and you'll look on a year-to-date basis. So what you would do here, you see how the SPY is actually down about 3.25% on the year. So if the SPY is down 3.25% on the year, we need to find things that are above that. And one of the things that I did yesterday, I actually put a short on in Apple that came out pretty well, but it was an intraday short where I closed it out at the end of the day yesterday. But we'll take a look at Apple on that same basis. And we'll see on a intraday basis, it was down 2.5%, a little bit over 2.5%. So it's still doing better than the SPY. So this would be a candidate, but I wouldn't do this on an intraday basis. I would come out and do this on a year-to-date basis. So we would go and try to hunt for things on a year-to-date basis and compare it that way. And those will become the actual short candidates that I would start taking a hard look at today and over the next couple of weeks. All right. With all of that being said, let's get to the key levels for today. All right, here we go on the key levels for today. Starting on the resistance side, we have Jack resistance at 439 to 440 area. Then Queen resistance at the 442 to 443 area. And King resistance at the 445 to 448 area. Now, on the support side, we have Jack support at 437 to 436 area, Queen support at 435 to 434 area, and King support at 432 to 431 area. All right, now that we have the key levels out of the way, the battleground to go higher today is going to be the 440 to 441 area, which means we have to break and close above that area in order to go higher. Also, we started the week at about 440.46 with expected moves of 451 on the upper end and 429 on the lower end. We haven't really gone far, so there could be a chance of wild movement today based on that alone. The main thesis is bullish, closing above 437.06 with a projected high possible target of 442 to 443. Alternate thesis is bearish, closing below 437.06 with a projected low of 431 to 429. The current minor channel we're in is 443 to 431. The major channel being 453 all the way down to 425. Let's take a look at some scenarios for today. All right, the first scenario that we could have could be an expansive range day structure. I don't really like the feel that I have for the market right now because it's just all in a flux. Like we're on edge, but it's not chaotic, and that's the issue right now, because there's no real sense of emergency in any direction right now, or sense of urgency. And with all the geopolitical stuff that's going on right now, that really irks me, because we can drop 50 right now as well as rally 50 right now. So it's a very awkward market condition that we have going right now. So let's get into this expansive range day structure. On a range day structure, basically within a range, we set a boundary high, we set a boundary low, and usually chop in between. On an expansive range day structure, we set boundaries, but then those boundaries are eventually pushed or broken. So what we're looking at, what I'll be planning for in the scenario today, or one variation of this expansive range day, is that we can go up toward or may have a decision area toward the jack resistance area before reversing and passing back through our previous close here. And one of the things that I just mentioned, which kind of has me unnerved right now, is the fact that we hadn't moved a whole lot in terms of where we are right now compared to where we started the week. And that means there's always a chance for a wild move through today's session. And that wild move could be down toward the bottom edge of the expected move, which is about 429. So this expanded range day could take us up, and we could come down, test the edge of the expected move, maybe a little chop sideways, and then even go back up, and probably make it back up across the previous close of yesterday. And like I always try to say, range days are the hardest to map out because there are so many different variations. Because there's nothing that says that we just don't come straight here through the closing through the previous close and have a number like that, where we just basically chop and then maybe a pop toward the end of the day. So there are a lot of different variations. You really have to be on your toes when we're looking at these range days. A lot of different things can happen. Let's get to the next scenario. All right. On the second scenario, we have a rounded reversal day type structure. We could find some momentum right before the closing, continue to rally toward the queen. At this point, the jack, queen, or king resistance area before hitting our midday chop area, and then finding that same energy coming down the second half of the day. Again, we have to stay on our toes today, because there could be a likely vice versa today, where we pop down first toward the lower edge of the expected move, find our midday chop before popping back up the second half of the day. That is the second scenario, and the probabilities are very jumbled, very close. I couldn't really see. It's really hard to get an edge in this type of environment. So we have to kind of stay on our toes for vice versa scenarios and everything that could play. Let's go to our last scenario for today. All right, the last scenario is possibly a trend day up. Again, we have to keep it in the back of our minds, the vice versa scenario. But on a trend day up, we open gap up from the previous close. We start off with a rally back toward and find support at or before the previous close. And once we gather at that support, we usually reverse and start the morning trend, and which would be a pretty powerful uptrend for the day or the morning, taking us to either the queen or king resistance area, where we'll find our midday chop. Second part of the day would be a head fake to continue the uptrend, and then more than likely a big fade into the close today. Again, I'm expecting no one wanting to be long going into the weekend or through the weekend, based on all the geopolitical stuff going on. So that is one scenario. Now, there is a vice versa scenario for this. And the vice versa scenario was that if we somehow lose a lot of momentum before the open and we open gap down, we could try to close the gap back toward the previous close, and then reverse and start our trend down toward what I would expect would be the lower edge of the expected move. If we reach that, there will likely be a lot of sideways chop around that area, and then from there we could have a possible head fake to break off of it and then possibly come through it And being that this is an expiration day, and a lot of people, if we find ourselves at this, a lot of people would be short, and we would have to buy back those shorts in order to close. There would be a rather decent spike going into the close. So those are the scenarios for today. With all the geopolitical stuff, we got to stay on our toes, watch for more scenarios, or more so have the vice versa scenarios played out in the back of your mind to be prepared for it, if that is in fact what happens. So as always, please know and define your risk. We are in some of the wildest times, and I don't see it getting any calmer right now. Maybe just a bit, another small calm before an even bigger storm. But always know your risk. And with that, I hope this helps. Wishing you a successful trading day. Have a great one.